Hey guys, this is Mr. Roxy coming at you live from Palm Beach in Florida. It is Monday, it is September the 12th. And what I was looking for this morning was energy buys. Are there still some energy buys in the market today, or have we scooped them all up and we're sitting on 200, 300, 400% gains and we don't know what to do with our cash awaiting investment? So what I thought to do was spend a little bit of time and sort of see what the smart people are saying and then what we can make up in terms of deciding whether we want to invest in energy stocks or not. So what I did was I went to Bankrate. So Bankrate is a website that you can visit. And Bankrate told me that the best energy stocks as of September 2022 were, and these are the top 10, Occidental Petroleum. So I'm not going to talk about Occidental Petroleum because if you've been with us for the past couple of years, you are literally sitting on a gain of 200, 300, 400, 500%. So we're going to skip Oxy for this particular video, but I do want to look at the rest of the top 10 stocks. So Hess, Conterra, Devon, Marathon, Exxon. Some of these stocks are obviously well known to many of you, and many of you are long in many of these stocks as well, which is great because that means you've had a great return. Just look at these numbers of the last year. Performance year to date. So since January, for 9 months, you're up, around 50% or more if you hold any of these stocks. So let's do a quick dive into each of these, and I'm not going to spend too much time talking about each individual stock, but it is a competition. And at the end of the video, I will tell you who my winner is for today. And then after that, you can shoot me down in flames because I didn't pick your stock as the winner based on the top 10 as published by Bankrate. Okay, let's go. Hess. Why don't I like Hess? Because it's got 2 red crosses here. So this is your kind of immediate little signal that I might not be a big fan of Hess. Now, despite the outstanding perform year to date, Hess currently has a PE ratio of 25. I want to be at 15 or below as a general rule. And it's also trading at its 52-week high. One thing to note as I go through these stocks, and I'm going to go quickly, is that almost all of them have institutional ownership in the 70, 80 percentile or thereabouts, with the exception of one. We'll get to that one in just a minute. So Hess for me is a no. Conterra Energy. So here's a company I've never really paid too much attention to. So let's take a quick look here at this snapshot. It's not a small company. It's got a market cap of about $24 billion. Positive earnings per share, trailing 12 months over the last trailing 12 months, 3.57. The PE ratio is only 8. It's kind of sitting just right of the sort of midweek range on the 52-week range at about $30. It hit a high of $36 a short while ago in, I think it was May or June. Institutional holding, as I mentioned at the bottom here of the screen, 93%. Interesting stock that has been flying under the radar for me, Conterra. How about Devon? This is a favorite for many people, including yours truly. I like Devon. I don't have a position in Devon. If I did not have a position in Occidental Petroleum right now, I'd probably be sitting on a mountain of Devon Energy for a variety of different reasons. Why? Positive earnings per share, 7.89. PE ratio of only 8.6. It's super cheap. And in addition to that, as you know by now, Mr. Oxy likes dividends. This one pays a dividend of nearly 7%. Currently paying $4.66, which based on the stock price of $70 is yielding almost 7%. Not too much wrong with Devon. If you're long in Devon, congratulations. What a great pick. Marathon Petroleum Corporation. Now, don't get confused here between Marathon and Marathon because there's another Marathon coming up soon in the top 10. How about Marathon Petroleum? So earnings per share, 14.81, a PE ratio of only 6.6. It's super cheap. And it pays a little dividend, $2.32, which is currently yielding at the stock price of $100. Surprise, 2.32%. Also just sitting right of its 52-week low high, which was about $114. Not too much wrong with Marathon Petroleum either. I don't like Exxon. And the reason why I don't like Exxon is not because it's a super major, it's not because it's a US stock, it's not because it's a great performing stock. If you've got money in Exxon, congratulations, you chose well, and you deserve your great return on your investment. there's not a lot wrong with Exxon. I'm going to come back to this one in just a second. Its earnings per share is only 9. It's super cheap. So if you wanted to open a position in Exxon right now, you can do so. In fact, it will have my blessing or stamp of approval. It pays a nice dividend too, especially for people on fixed incomes or older people. $3.52 is currently yielding about 3.6% based on the stock price of $98. So why don't I like Exxon? The primary reason why I don't like Exxon is because as one of the 2 leading energy corporations in the United States, one of the 2, being the other one being Chevron, Exxon will always be a target for activist investors. And all these lunatic green fringe people target Exxon on an ongoing basis. And that's also one of the reasons why you see the institutional ownership of Exxon compared to all the others is, relatively speaking, only 56%. You're at the bottom in the middle of the screen compared to everybody else sort of at 70, 80%. And remember, when we talk about institutional ownership, we're not talking about people like Carl Icahn and Warren Buffett specifically. We're talking about the companies that pretty much own all the stocks of all corporations that are publicly traded in the world. In other words, Vanguard, BlackRock, State Street, some of the smaller funds, Dodge and Cox, Susquehanna, etc. Those are the institutional investors who scoop up these funds. So for me, Exxon is a no-go. Valero looks very, very interesting. It's actually a pretty good stock for many, many different reasons. So its earnings per share, 17.43, PE ratio of only 6.5. It's yielding on its dividend of $3.92, currently 3.5%, based on the stock price of $115. And it's actually priced sort of, to buy. So Valero is not bad if you want to pick up some Valero here. I'll give this one my blessing or stamp of approval as well. But let's go on. Here's the other Marathon Oil, MRO. So Marathon Oil gets 2 check marks from me, one for the earnings per share of 422, and the other one for its PE ratio of only 6. But these are, so far, almost every single stock is a good one to pick up, except maybe for Hess. And then the other one that I highlighted, Exxon, it's a bit touchy-feely in terms of more activist related as opposed to investment fundamentals. ConocoPhillips, another beautiful stock. And I know a lot of you are long in ConocoPhillips. What a great pick this has been. I don't have a position in Conoco. I have positions, as you know by now, in many energy stocks. I could flip out any of my energy stocks, like Energy Transfer or Enbridge or whatever, for ConocoPhillips, and I'd be just as happy. Earnings per share, 12.14. PE ratio of under 9. And an annual dividend yield, nice, $4.44, which is currently yielding almost 4% at the stock price, with at the stock price currently trading at $115. Institutional investment down here in the bottom, 79, like all the others, right? The exception here has been Exxon so far. APA. So many of you will know this company perhaps from before. Anyway, APA has been a favorite for many people as well for a long period of time. EPS below 9, so 8.89, pretty good. The PE ratio is only 4. Again, it's sitting just to the right of its 52-week high, which was $51.92. It's got a long way to run from $40 to 52. Not a lot wrong with APA. In fact, you could probably open a position in APA as well, but let's dive a little bit deeper. So what I did here is I took my top 5 from the list of 10. You remember, originally I excluded Occidental Petroleum, so I was down to 9. And then from those 9, I selected 5, so more than half of them anyway. So I'm trying to be objective here because I'm trying to look for a winner, right? So what I have here is I've grouped them. On the left side, you have 3 stocks that are, you see at the bottom here, it says oil, U.S. exploration and product, and the other 2, oil, refining and marketing, because oil, when you refine and market, is not the same as exploration and product, right? So these companies are different. So if you wanted to, you could potentially pick up one of each of these and diversify your energy holdings a little. So you pick one from the left side and one from the right side, and you have a little bit of diversification in your energy portfolio. So the 3 that are sort of my winners, because this is my short list here: Conterra Energy, Devon Energy, and APA. I'm not going to dwell on this one. The two refining and marketing companies are Valero and Petroleum. So now I have to whittle these down to one or two to get to a winner. So first thing I did here was I compared them. So from a technicals point of view, Conterra Energy and Marathon basically kind of wins the battle. But remember, I don't look at the technicals in exclusivity or exclusively. I look for a whole variety of different things when I decide where I want to park some of my cash awaiting investment. So we're just having some fun here, and at the end of the day, you can educate me as to whether you think I'm going down the wrong pathway or the right one. If we look at the technicals, there's not a lot to choose here. From a weighted alpha point of view, the outlier is Devon. So what I'm going to do is, based purely on the technicals here, I'm going to say I'm going to move Devon aside and focus on Conterra Energy. So today's opinion, by the way, is almost 90% a buy. And then I flip right over to the other side and I'm on Marathon. And between Valero and Marathon, if we look at the technicals as well, which means I'm looking at the 20-day raw stochastic and at the weighted alpha of these particular stocks, there's nothing to choose here from a weighted alpha point of view. So I'm going with the analyst recommendation of 88% buy on Conterra Energy and Valero. So now I'm down to 2. Right at the bottom, you can see the performance. Both of them have been doing okay as energy pulled back, which impacted all of them. The one that pulled back the least over the last 3 months was Devon. But if you look at it over a 6-month period, 20%, 20%, there's an outlier there. APA up only 3%, and we've got 26 and 28. So not a lot to choose there. Sort of the two on the left side, sort of in the 20% range, and the two on the right-hand side in the 26, 28% range. Not a lot to choose from, but now I'm down to 2, right? Conterra and Marathon. So now I do one level dive deeper. And you will know by now, if you've been following my videos, that I always look at debt. I'm not overly concerned with debt. If companies are using leverage in order to make more money, that's okay. If they're carrying too much debt on the balance sheet, they need to do balance sheet repair. As we've seen with most of the energy companies, as the prices have been high over the last year, they've all been very efficient at cutting the operating costs, paying down their debt, returning money to shareholders through share buybacks and special dividends and things like that. So now I'm going one level deeper, and I'm looking here at Conterra's, and the picture is good. They've actually been, if you look at their debt to capital ratio, it's only 20%. The industry is at around 35. If you look at the change in debt, that's positive too. They've been reducing their debt quarter over quarter. The quick ratio 1.77, and look at this interest coverage, 77. So they get a green check mark from me on a whole variety of different parameters, right? They've got a great PE. They've had good earnings per share. They don't have a lot of debt. They've been reducing their debt. The quick ratio means that they have significantly more, almost 2 times more cash on hand than what they have current liabilities. That's a great position to be in. And in addition to that, they have an interest coverage for the most recent quarter of almost 80, which is phenomenal, right? So they'll have absolutely no problem repaying their debt. In fact, it will be really, really easy. How about Marathon? So Marathon, unfortunately, is going to get knocked out here because Marathon's total debt to capital ratio has actually been increasing. And in addition to that, it is higher than the industry average. The change in debt, you can see a quarter over quarter. It's actually, well, in reality, it hasn't gone up a bit. It hasn't moved much. And that's a terrible position to be in, because when the prices of the commodity that you're trading in is so high, you should have been able to knock a dent in the debt and maybe done some refinancing with your long-term bonds and things like that. And they didn't seem to do a very efficient job at doing that. But don't get me wrong, Marathon Oil and Marathon Petroleum, they are great companies. So this is a competition. And as I said, I'm just having fun, but I'm looking for a winner. So the quick ratio for Marathon is 1.1. So they have just slightly more cash than what they have current liabilities. But you can see that their interest coverage is pretty good at 29.5. So nowhere near as good as Conterra's. but still a very solid investment if you want to be long in Marathon. So today's winner is Conterra Energy. So I have not covered Conterra Energy ever before, not that I can recall anyway. In fact, it's a company that is even, I'd say, relatively new to me because it's the first time I've actually done a little bit of a dive into their financials and into the company to see sort of what their debt looks like and take a snapshot on the company and break it down into bite-sized chunks. You can see the chart doesn't look too bad. Year to date, obviously, it's been performing quite nicely. It's up 56%. Like most of the energy companies, it's pulled back over the last couple of months or so. It hit a high here of about $35 in $36 in June, around about mid-June or so. When it reported most recently, as of the end of June 2022, it reported revenue of $2.56 billion for the quarter, which is up 520% year over year. Now, of course, that's a ridiculous number, but don't forget this is applicable to almost all energy companies. They all did significantly better, sort of not only year over year, but even quarter over quarter because of the high prices of the commodities that they are dealing in. Great numbers. Net income, $1.23 billion, up almost 4,000%. Diluted earnings per share, $1.52, up 1,800%. Net profit margin nearly 50. That was up 560%. They comfortably beat the earnings per share expectations at almost 6%, and they beat the revenue expectation 16%. What do you guys think? Have you heard of Conterra Energy before? Are you familiar with the company? Are you long? If you are, that'd be interesting. Tell us why, what the compelling reason is why you went long on Conterra to begin with, and maybe what your investment narrative or thesis is for staying long in Conterra Energy. So guys, as I said, I'm just having some fun here. Those are the top 10. Of the top 10, ironically, I only have a position in one of them, which is obviously Occidental Petroleum. It would be extraordinary for Mr. Oxy to not have Occidental Petroleum in my portfolio. My cost basis on Occidental is about $12.51, $12.52 or so. So that position for me is, is something I can hold now. I've taken some profit along the way. I'm comfortable with where I'm at with Occidental. So I'll just hold it in my portfolio and look for something else to buy, which is what I was doing with this video, because I was exploring the other 9 stocks that I don't own. If you want to go safety first, maybe your choices would be like Exxon, maybe ConocoPhillips or something like that. Marathon's a good buy. Devon is a fantastic stock. At the end of the day, to be fair, all 10 of these stocks are just absolutely excellent investments to hold long in your portfolio right now. But my winner for today is Conterra Energy. Let me know what you think in the comments. I look forward to interacting with you. Bye for now. Bye-bye.